A huge red day today on Q3 earnings for Target, down 21.5%, closing the day at $121.72. Should Target be back on our radar if you are a value investor? We're going to go over the Q3 earnings very briefly and talk about that question. But the most important thing in this video is the 2 or 3 minutes you're going to spend learning on how to use earnings to value a company's stock. Price to earnings. Remember, one of the fundamental things, the thing that every analyst looks at first, is the price of the stock properly set relative to its earnings or its expected future earnings. Let's get right into it. It's been a while since I've traded Target, been a while since it has been on my radar, about a year, in fact, since I exited the play. You can see my trades up there on the screen. I bought a little bit in August of 2023. I bought a little more as it reached its lows in October of 2023. The best entry I got was $107, and I sold a little bit under 90 days later in December of 2023. Bringing in a total gain around 30%. Now, I'm not the hugest fan of owning Target, but when a good value opportunity presents itself, I'm not afraid to buy some. So with the big miss and the big red candle there, let's look at their earnings and discuss if it is time to look at Target again or not. The big reason for the plunge on Target's price today as they announced Q3 earnings pre-market is not only did they miss the earnings estimate, but they also missed revenue estimates that analysts had in place. This is after they enacted some changes, cutting prices on over 5,000 items. They still were not able to bring customers in. And we know Walmart beat, and Walmart is taking market share. Target is losing market share to the competition. But the big price reset also has to do with guidance. And I want you guys to have this drilled in your head. If you don't know this already, prices of a company's stock are derived from expectations for future earnings. And not only did Target miss on Q3, they lowered their guidance for the entire year, which includes Q4, and the price immediately reset based on expectations of future earnings for the year, including lower Q4. Target now tells us that they expect full year adjusted earnings per share to range from $8.30 to $8.90 for the year. That is lower than their previous guidance 3 months ago, which was $9 to $9.70 per share, and below analyst expectations, which was $9.55 a share. It is helpful sometimes, guys, to go look at the historical PE ratio of a company. And if we do that for Target, you can see that back 10, 20 years ago, it was trading at a PE ratio of 9 to 10. And from 2016 to 2019, a PE ratio of 11 to 12. When COVID hit, Target got a lot of juice and the price soared up. When I bought Target in October of 2023, you can see on the lower line graph there, the price to earnings ratio, the price relative to its earnings, had reached a local low of 13.7. More recently, Target's been trading at a PE ratio of 16. I mention all of this because we can use this information to understand how the market reacts to companies' guidance when they give us a specific number they're expecting for full year earnings, and why the price fell to exactly where it is at today. And I hope you guys can kind of remember this stuff as you're wondering how to value a stock or why stocks react to certain news and why the price moves to certain price points when news drops. For example, if we take Target's closing price today, $121.72, and divide it by the high guidance that they gave, which is $8.90 for the year, we get a PE ratio of 13.7, which is exactly this low that we had in October of 2023. The market said, we're not going to give you a PE ratio of 16. We're going to reset you to where you were in October of 2023. The other thing that I'm looking at, though, is that low end guidance that Target gave us of $8.30 for the year. So if I take $8.30 and multiply that times 13.7 PE ratio, that gives us a low end price target for Target of $113.71. And that's assuming that a PE ratio of 13.7 is the lowest that it can go. If we think about the historical average PE ratio of Target, 11 or 12 could be in the cards for Target, depending on what happens over the next several months. If we use their high guidance of $8.90 and apply a PE ratio of 12, now we're looking at a price target of $106. Is it possible that Target could see a PE ratio as low as 12? The best way to do that is look at the forward PE ratios of some of its peers. And as we're looking at this table here, ignore the 12 that you see on there for Target because that's based on Target's old earnings guidance. This number will update. But if we look at Dollar General or Dollar Tree, we have 11.9 and 10.49. So yes, it is entirely possible that Target could see a valuation lower than where it's at today with a 13.7 forward PE. The other thing to keep an eye on, especially if you're not a retail expert, is what are the analysts saying? And we already have analyst upgrades for Target. Some of them still very bullish. Edward Kelly lowered the price target to $150, but Paul Trussell with Deutsche Bank has a $108 price target for Target, in line with a PE ratio around 12. Everything is going to come down to Target's execution, and they keep on lowering prices on more and more items, now up to 10,000 items, they're telling us, to get customers in the door. But now we got to think about where are they going to fall in on that range of $8.30 to $8.90, or is it going to be lower or higher than that range? There's a lot to consider here. And so I'm setting a yellow line here at 121 to say this is where I'm interested in Target, but the green line is where I'm interested in buying, somewhere below that. $108. If it's not below 108, which coincidentally is very close to where I bought in October of 2023, if it's not below that line for me, I'm not really interested in Target at this time. If you are a little more bullish on Target or owning retail stores, maybe you consider a price level of 114 as a potential entry. For me, I need it a little bit lower to get my interest in Target. Hopefully you got some value out of this video and the discussion of PE ratios. Remember, there are a lot of people out there on social media who will not talk to you about price to earnings of their stock. They have very wild expectations for the valuation of their stock, and they will not talk to you about the earnings, the price to earnings, and how that company is set up on PE ratio relative to its peers. These are not optional things. You must pay attention to that or you risk overpaying for a stock. Let me know your comments or questions down below. Thank you for watching. I am Tony Denaro, and I will see you on the next video.